Welcome to another Friday with Frank, and we are continuing with how to have an achievable retirement while enjoying a life of significance. Today, we're going to focus on preserving your legacy, and that's going to be primarily a just brief intro of the estate planning tools for high net worth individuals. What are some of the keys? One is we need to be in line with your goals. We covered some of that in the discovery process of what we do with you. We want to maintain flexibility as tax laws are changing, anticipated to change again. We want to make sure we have some flexibility in documentation and in qualitative decisions. We want to keep in mind that estate planning is often multi-generational. We think of children and grandchildren, sometimes special needs individuals, but we want to make sure that we're covering the long run. Professional fiduciaries are critical consideration. We want you to not be dealing with a criminal or real estate attorney when you're doing your will and trust documents. You want to be dealing with a tax and estate professional. Tax minimization is part of the wealth management. If we can save you 40% in taxes on your estate or get discounts for family, that's a part of the wealth management process. We want to leverage tax brackets. We want to leverage family and how we can shift to different individuals or entities. And the main decision you have to make in most simplistic terms is who do you want to be the beneficiaries of your wealth? We want to make sure it's either your family and take advantage of leverage, discounting, and control. Do we want to give to charities now or later? And we are doing a tremendous amount in this area because it benefits more than just the charity. It benefits your children and it benefits you and your legacy. Or we want to also minimize tax, and I don't know many people that come in here and want to pay more taxes to the government. Usually they would prefer their special causes and most importantly, their family. So what are the ways to transfer assets out of your estate? Well, you could be gifting on an annual basis. You can combine gifting, $15,000 per individual and $30,000 per married couple. On your estate, each individual currently has the ability to gift $11,400,000 without paying tax, but they would have to file a tax return if it's over $15,000 per individual. We also are preparing individuals for the sunset provisions of 20 or 12, 20, 25, and they could happen sooner given some of the new legislation coming out. We want to help with taxable inclusive gifts and tax exclusion gifts. We will tell you more about that on an interview. And then there are many unlimited gifting opportunities, including education and medical expense. And certainly there's complex trusts. If I were to give you an analogy of how to start building your estate plan, I would think of it as your estate house. The first thing is to have foundation planning, which involves wills and documents and getting the ownership correct on your titling and beneficiary designations. We also want to make sure you have adequate liquidity and have the basic gifting tools, whether it be education funding, whether it be gifting to your spouse during lifetime, or annual gifts to other individuals that you care about. Where people of high net worth or affluence come in to see us more and more is if you will get into more complex planning, which involves trusts. And we do spousal lifetime access trust, grantor retained annuity trust, qualified personal residence trust, and business and succession planning with family limited partnerships and LLCs. This is where we get into really mitigating significant wealth tax, and that requires a team of competent professionals and the appropriate planning tools. And once again, charitable planning has been a hallmark of our work together, and there's many things that we do in that area. What's very popular now is donor advised funds, the equivalent of setting up a foundation, split interest gifts with CLATs and CRUTs, and personal family foundations. So, what are the next steps for you to take to get the estate in line with your retirement planning? Think about your goals and wishes. Who do you really want to benefit from your hard earned wealth? Begin the conversations with your estate planning legal team. Remember that estate planning is a dynamic process. Various tools can be layered into your plan over time, and make sure your assets are titled in accordance with your plan. Make sure your beneficiaries are in line with your plan. Be prepared to update your plan every few years. And in conclusion, don't hesitate to call and come in for a review and a discovery of what is most important to you. We look forward to seeing you. Have a great Friday,